All right, guys, we're live. Zika Jam, everyone. Thank you for joining in. Today, I'm very psyched about our speakers. I mean, I'm always am for whoever wants to talk with me for 45 minutes. But today we have Stephanie from Veda with us. I've known Stephanie for a while. We've actually I think taken a little ski trip together, but we've been on the same ski resort and have talked previously a lot about crypto economics, vault strategies, all of that good stuff. And we have also Justin from Say. Everyone, of course, knows Say, one of the biggest L1s. And also, as it so happens, the most stable EVM network that Union connects to. So for me and the development team, it has a little place in our heart because all of the new stuff that we're building, we test on our internal Say network connection because we like the fast block time and having a fast iteration cycle. So it's one of our favorite L1s to kind of integrate with. If you guys want to give a brief intro more about yourself, feel free, and then we'll dive right into it.
So I'll go first. I'm Stephanie Vaughn. I'm COO and co-founder of Veda, and we're a vault infrastructure and vault manager for about a little bit over or close to 4 billion TVL on chain. So it's very exciting cool times. Yeah.
Yep. And I am Justin. I'm executive director over here at the Say Development Foundation. Have been in crypto more broadly for almost the last 9 years now at this point. So spent a bunch of different time in areas like the investment side, on the sort of ecosystem building side, on the research side, and then spent the last few years over at Solana as one of the sort of earlier folks over there, responsible for originally sort of the BD side, and then later helping to work on Solana Ventures, which is our investment arm, investing in projects like Step-In and Phantom and Magic Eden and a number of others that have gone on to become some of the major projects in the ecosystem today.
Very cool. Well, for the viewers here, you probably know me, but I'm Karel, CEO of Union. We do zero knowledge bridging and infrastructure. So kind of a layer in between the app layers like Veda, the vault infrastructure, and the L1s, Say. So guys, I was thinking for today, something that has been a lot on my timeline, of course, and what I keep reading about is obviously lots of interest in BTC, BTC assets, in stables as well. I see a lot of these vault strategies pop up. Circle, of course, which kind of is a vault strategy with a stable associated with it, right? But in the end, as a treasury management, I feel like those types of projects at the moment are really taking the spotlight. I'm curious, Stephanie, where do you see this go? Do you see this market expand a lot more? Is there for the rest of this year and the next year a lot of new stuff that you're additionally excited about? Are we just starting kind of the hype cycle for these fund management protocols, or are we at peak right now?
No, I think we're just starting. I mean, I think every day we see another kind of stable coin or a stable coin asset. I could say that, and it's really exciting, what we'll be able to do with the native yield for these, from Veda's perspective. So I do see this area growing more than anything else right now. Yeah, I think Bitcoin had a moment for a while, but it's hard to get yield in Bitcoin, and so now there's a focus back on stable coins.
Do you think it's from your perspective, loads of new stables? Of course, I've heard some users being kind of almost exhausted by the number of stables being created. Is it for you guys more like an opportunity, you rotate funds into it and 3 months later you go into the next stable opportunity, or are there a few players where you think those are going to be the big winners, so we want to get long-term exposure to that?
Yeah, I think they'll be big winners, and I think they're already kind of emerging. But with things like Athena, et cetera, I think certain people will take over all the yield. But as far as just stables in general, I mean, is that what your question is? USDT versus USDC, or yeah? I mean, I see there's a lot of stables, lots of places to earn yield, right? As more people launch stables and then try to incentivize them. So yeah.
Yes.
I think the whole group will go. Go ahead.
Yes, at least like my idea in mind like kind of goes like, will we have a future where there's technically like 300 different stables out there, each with like a slightly different yield characteristic? And are you guys like arbitraging those against each other, right? Like constantly rotating in and out of them, and does the end user not really know that there are technically that many stables out there because they're interacting with Veda and they have some like of aggregated stable? Or do you think that's just like a little bit of a period right now and that's going to go away and we're going to go back to being just a couple of major stables out there?
Look, I think overall people will just use a couple of major stables, and the yield will come from different places though. And then being able to get like, real yield or use real world assets as like underlying yield for a stable, I think will become, that opportunity will grow, and then how we see that yield in the stables will change
Makes sense.
in the future.
And kind of like which chains and ecosystems are you most excited about for this right now? Like where do you see the most yield opportunities, I guess?
I mean, I guess we just launched like with Plasma, but there's like, opportunities all over the space. Yeah.
And so how do you see this, Justin? Is this something where like Say is like actively trying to because Plasma is technically getting yield from Ethereum, right? And under the hood. So is that something where you think this has to be on Say? Is this like a big strategy for you to overtake this?
Yeah, I mean, look, I think in general, Say as a chain is super well suited for all of these types of use cases, particularly because of the scalability, right? So being able to scale to a bunch of different users and the low transaction fees. And so when you include the low transaction fees, you're thinking about users who may have, a very small amount of assets, earning yield. Every kind of distribution that they get, the fees matter, right? And they start to add up. So the lower those fees are, the closer that user gets to having 100% of that yield, actually delivered to them, versus paying for things like gas fees that, kind of take away from that yield.
Yeah, that makes sense. How do you see this like long term with these like stablecoin specific chains though? I've heard of these projects that basically allow like stables for gas fees, maybe focus for this use case. Do they have an edge on you guys, or do you actually think that it's a bit of a meme and your model's better?
Yeah, I mean, personally, I've sort of yet to see an argument that that kind of lines up with this, narrative of needing to have sort of a stables only chain. The, benefit of having a chain that is sort of, an integrated chain, I'll call it, right, where you have a bunch of different things in the ecosystem, is it creates sort of organic demand for stable coins, right, and usage. If the chain is only used for stables, it makes it much harder to get to that point. And a lot of, teams, when they're evaluating where they want to deploy, some new asset or their new project, are looking to see traction on these chains. And if there is only traction from basically like peer-to-peer stablecoin transactions, it is much harder, in my opinion, to make the argument for deploying on that chain than if there is sort of a vibrant ecosystem across a bunch of different verticals.
Okay, that makes sense. Do you counter this, Stephanie, or like do you agree with this? Because you guys, of course, have to kind of decide. So I assume Veda can support like every protocol out there, right? Like you guys have to pick basically which ones you want to support, where you want to invest
Yeah.
yourself in. Yeah.
Yeah, I think like our like general thesis is that we try to pick the winner of a certain category, and so and make a bet on them. So I do think like there'll be winners like within the stable coin category, or a few different winners I could say, but there certainly isn't going to be, I don't think, a ton of different stable coins, but I do think yield will come from more and more places, and we'll see more and more underlying strategies for a few specific stables.
Do you think the winner is determined by which one has the like biggest FDV in stable, or which one has the biggest better yield opportunities? Like what's more important for, let's say, like a new stable company?
The winner is going to be determined by what people feel is the safest, and then they'll use that currency. I mean, I think overall that's how it'll work. So as people like become more and more comfortable with the different yield opportunities, like those stablecoin opportunities will grow. But
All right, so
there's level. There's going to be a learning curve on the level of like the people getting comfortable with like where the yield's coming from.
Yeah, at least from my gut feeling itself, I felt like back in 2017 we were like really afraid of USDT, right? Everyone was keep like putting it constantly, like treasury not being public. That was big on mind. I feel like why USDC got a lot of market share, right? Because that was literally the counterpoint for it. I don't see like those concerns rise up that much anymore. That like a certain stable isn't as transparent. I see less. I feel like maybe that's just my own timeline that I see that less happening now. Maybe it's because there's so many more stables right now. Well, previously when we just had two, it was more easier for like the regular user to grok like what's the difference between them. Like for all of these new stables that are being created, do you see indeed like transparency or the security behind it being potentially the bigger seller these days, or do you not
I
really
do
see
think
what
I do think that'll be a bigger seller. Look, like it's easy to like go into something that has a lot of yield right early on, but like what lasts longer and is what's safer, and that's what more people go into. So yeah, I mean, I think both like USDT, right, and USDC have been around long enough, but yeah, they went back and forth like for years about, you know, maybe people being like afraid of USDT, but it's different here because the like where the yield's coming from is important. And there have certainly been a lot of staples that a lot of people went into that didn't end up in good situations, even, you know, recently. Like, so yeah, I don't know. I mean, I don't want to call them all out, but yeah, I don't think that that's true. Yeah, I guess more people will attract more people like to the staples, but for feeling safe, I think it's important.
Okay. So then the big question, like where does the yield come from in the stables right now? I think with Athena, with the basis trade, it's kind of decreased, right? So the opportunity shrunk a lot, but I'm not really sure. I didn't follow up that much on it. For like these newer stables that you mentioned, they've been kind of being created daily. Like where does the yield mainly come from? What are they doing differently, or what are they doing the same? Is it all incentives?
Yeah, I think like there'll continue to be more like real yield opportunities like the basis trade. And I think there'll be multiple opportunities for different stables and multiple different trades that will get yield. And I think there'll be yield, you know, even for like different real world assets on stables that we'll see like, and then, you know, mixed yield from different sources in different stables in the future. You know, yield coming from DeFi, yield coming from, you know, centralized exchanges or whatever, like the basis trade, and then yield coming from real world assets.
Is there a specific like vertical where you guys are more excited about here, or you believe like that's the one that's going to grow the most, where the other one you might be less excited? I hear in general like people are a bit less excited to feel about the DeFi vertical at the moment for the shield, and more maybe RWA in the basis trade sides, but would love to hear your opinion on that.
I think we're excited. We're able to support all these opportunities, and we're excited, yeah, to like, you know, just bring as like many different sources of yield to our partners, and do so like in a safe way and a transparent way. It's not transparent, I think, like in some of the centralized like exchange like situations right now, but like we'd like to build and help make this a more transparent system. Same with real world assets. But
do you have a different opinion, Justin? Like, are you saying like actually this like one vertical excites me the most? Like that's the one that I want to see like come 90% of the yield come from.
No, I mean, look, I think it'll continue to be diversified, and I think it depends on market conditions, right? So like the Athena trade, the basis trade was much more exciting from a yield perspective, you know, maybe, you know, 6-9 months ago. I think as that sort of, you know, died down a bit, then something like RWA becomes more exciting, right? Things like interest rates, you know, obviously play a factor in this as well. And then I would say the last thing is just the kind of evolution of more of these assets from the real world side coming on chain, right? So if the treasury rates are 4 to 5%, but, you know, private credit rates, you know, back some stable coin that are offering 10%, you know, maybe that'll be more attractive to the average user. And I think, you know, stable coin flows will probably follow.
Makes sense. Yeah, personally, I felt it a bit of a shame to see like the whole DeFi in the front, CeFi in the back type of protocols. Like from a yield perspective and product perspective, they're quite good, of course. But what I really liked seeing was the kind of the migration from like Coinbase offering financial products which are backed by like Morpho and stuff, right? Like DeFi being the true like base layer for finance, and then it's kind of infiltrating TradFi or centralized finance. I'm like not that big of a fan of the opposite happening, where like in the front it seems like a very decentralized asset, but then once you actually look into like where the yield's coming from or how it's being backed, it turns out to be like fully centralized. I feel like that's from just a technological perspective is a bit of a step back from what we're trying to achieve, and that like long term there might be a gotcha, right? Like we go into a recession, banks might fall over, and suddenly we get indeed like the stable is fully unbacked because of a defaulting bank and the US not bailing it out. So that's my only the gripe here, where I kind of look at that space and think, in some sense, from like a product perspective, becoming much more interesting. And of course, I kind of love high yield as well. Like I'm not immune to just selecting the one with the biggest number. But from like what kind of protects the users and why I feel we went into crypto and why we built like L1s and vaults and stuff, it might be a bit of a setback. But that's just the Cypherpunk opinion.
I mean, look, I think it's a fair point. Ultimately, it comes down to what the assets are. So, to your earlier question about, who are kind of the winners and losers long term here, and can they be 2,000 different stable coins? I think ultimately similar to the bond market, and how there's a range of quality of bonds, right? You can have the same thing in the stablecoin market, right? Where maybe some of them are higher risk, but offer higher returns, and then from the other side, maybe they're lower risk. They're like a treasuries only strategy, like BlackRock's Biddle fund, and they'll probably offer lower returns as a result.
Yeah, that makes sense. With kind of other asset categories, do you guys see like something that excites you? Like Stephanie kind of mentioned, like BTC, it's hard to get yield on. But BTC, it's almost its own yield, right? If you're a believer, right? And as long as you just hold it and you don't lose your Bitcoin, you're going to be good in the end. So any amount of yield you manage to get on it is already a win. I remember like a year ago, we were all talking about ETH, ultrasound money being deflationary, etc. I guess price-wise, that didn't work out that well. Like for like these like other blue chip L1 assets, what's your opinion on that? It's like a future outlook, like eigenlayer, restaking. I think that from an economic perspective, we all thought that would be like major drivers for ETH price increase or at least revenue generation. How has that kind of worked out? Like I didn't really follow up too much on the aftermath of all of that, but do you maybe have an insider look for us?
I mean, I think it's going to take some time. I think there is time right now. Like I think for continued incentives, like to grow the market. But I think to get the number, to build out their ecosystem, it's going to just take more time than everybody sort of anticipated. Like when all the LRTs were super popular, like last year. So that's I guess my opinion there. But I do think like it'll work eventually. You may see some consolidation.
Is the issue that like some of the ABSs like aren't yet generating like real revenues? That's kind of the problem.
Yeah, I think that's the major thing. It's just going to take time to build that. It's not going to like just show up overnight, like the same like with everything in crypto, and people starting to use it. But I still think the principles and like under like idea behind Eigenlayer makes sense. So
yeah, and of course we have like EigenCloud and stuff. So another like product that has a pretty good outlook on like generating hard revenue, right?
Yeah.
Is it something you guys played a role in? Because I know you guys work together with like EtherFi and a lot of the major LRTs. EtherFi kind of pivoted a little bit to like neobank, right? Like I saw they have a credit card right now, so at least not pivoted, they expanded their product suite. I should say
I
that.
see like everyone's just expanding, but like still, they have their LRT, and we work with a lot of different companies, like EtherFi, in order to help like get yield for their LRTs or yield for their assets, like Lombard, etc. So just real yield in DeFi space. So yeah, but I think that it'll just take a while for those areas to grow. And we've been operating Liquid ETH like for over a year now, and you know, it's not like incentivized, it's real yields, and it's like one of our biggest products. So with EtherFi.
Makes sense. Seeing that like space evolve, Justin, has that perhaps like made you think for different economic policy around say or adjustments? Because of course an L1 token as well, it has to make revenue from like generating gas fees, right? But also I guess you have to think about like inflation stuff. Has it like since founding of say kind of changed the thinking around that? Do you guys have like future plans for that as well?
Yeah, I mean, I think you know, this is obviously something that is constantly evolving. You know, while there isn't anything, you know, today that I can share as far as like, you know, change in economics or anything like that, I can say that we now have a kind of community voting process called SIPs, so Say Improvement Proposals. And so I would venture to say that over, you know, the coming months and years, we'll see a lot of talk about, you know, different things, you know, in the ecosystem, in the chain, right? Whether it's technical changes like our SIP3, which was recently, you know, passed, or if it's for non-technical things like economic, you know, allocation of capital, that sort of thing. So nothing I can share on that front, but certainly, you know, something that we're going to constantly evaluate over at the Say Development Foundation. I know Say Labs has looked at it as well, and so, you know, something that is top of mind.
Yeah, and you from a personal perspective, is it something where you think keep it simple is maybe the best approach here, right? Like don't overcomplicate, or is it something where you think, well, maybe like L1 tokenomics that have been relatively similar, right, over the last couple of years, kind of due for maybe a bit of innovation? Or where do you personally stand on this?
Yeah, I mean, look, I think you have seen a number of teams, particularly over the last like 24 months or so, try, you know, some different models. Some of the stuff worked well, some of it didn't. And I think, you know, for us, you know, one thing that we're very kind of you know, gung ho on is making sure that we're not driving, you know, change through some of these things that are maybe like more directly, you know, token related from our side at the Say Development Foundation. We're just really looking to, you know, see the ecosystem continue to grow and let that, you know, drive value for users through network activity, right? And we've seen this in a number of ecosystems over time, but generally, keeping it simple tends to, you know, be the better choice if you want to create that long-term type of sustainability for an eco.
Yeah, makes sense. A couple of episodes ago, we had Smokey on here and a couple of other folks from the Bear ecosystem, and I definitely feel like they indeed had what I thought was a really original design, right? I was looking forward to let's see how this plays out. Maybe in the bear chain affected by the L1 Cosmos curse, or tokenomics indeed not perfectly working fine, or just overcomplicated indeed, right? Where because I feel like the chain has a lot of traction compared to for the number of users, people actually building on it, but somehow it didn't work out as well as they had planned with like the internal mechanics. I think they're doing a redo of that. So I might tend to agree with you that indeed maybe just keeping it simple for an L1 token, right? Like user understands like this token, you need it to use the product and that's it. Might actually be what like works best for at least like building an ecosystem that builders can predictably use. Because that's I feel still like one of the biggest reasons, of course, when you like design the token around your L1, right? It's not just like how do I get this to pump and hockey stick up, but how do I create like an ecosystem where builders reliably know, like when I build a product, this is going to be the cost. This is how much each user interaction will cost, and these are services I can provide directly.
Yeah, I mean, what I'll just say there's a lot of like secondhand effects, right, to everything that you mentioned, right? So, you know, I think optimizing for the developer and for the user is probably the most important thing. If you're optimizing purely for, you know, basically like investors, it starts to become difficult to build, you know, the top quality product, right? And this is not something even specific to crypto. This is something we've seen in equity markets, over years and many other markets. So I think it's not surprising that, really optimizing for these two groups is probably the easiest way to ensure that you're able to create a product that's sticky.
Yeah. Are there kind of other initiatives that you guys are working on to make Say more attractive for builders to come aboard? I remember you guys switched right from having a CosmWasm to the EVM. I think you're deprecating CosmWasm entirely, right? To just have a single VM on the chain. How are you even, by the way, doing that migration? Like people who've deployed a CosmWasm contract, are they just like screwed when you remove it, or how do you navigate something like that?
Yeah, so I can give some more context there. Yeah, I mean, what we've noticed over the last 12 months, about to be 12 months at this point, actually, since the launch of Say's EVM, is that virtually all the activity in the ecosystem has shifted towards the EVM. And so we have a chart that is public that that we look at. It's on Dune. It's just, if you just look up like Say Network Dune, I think you should be able to find it. But basically, it compares the number of new users coming to the chain on a daily basis from the Cosmos side and from the EVM side. At this point, those numbers are about 99% skewed towards EVM. And I think that's natural, right? I mean, this is, EVM is the largest ecosystem in terms of developers, in terms of TVL, in terms of users. And so, when you really think about kind of the impact of launching the EVM, I think it's pretty obvious that it makes a major difference in how easy it is to acquire users and builders. And so, on our end, I think, we saw this community proposal, like I mentioned, Say improvement proposal that went up. And I think it made a lot of sense to me and a number of others at the Say Development Foundation to kind of back that proposal, given what we'd seen in that shift. What that means actually is that for the vast majority of users, there is virtually no kind of day-to-day impact other than making the experience much smoother and easier to understand. Having this sort of interoperable to VM system does introduce, some additional complexity that you don't have, for example, on a Arbitrum or Polygon or some of these other chains, right? And so I think for us, we definitely support, SIP3, which was that, improvement proposal, and think that there is a, very clear path to having users who do have assets exclusively on CosmWasm migrate over to the EVM. We've shared, some writings from our engineering team, so not going to, from the engineering team over at Say Labs that have kind of clarified how exactly that looks in practice. But for the most part, again, most of these users today are already on the EVM, exclusively. So it really won't impact people, very much who are used to their day-to-day at this point.
Yeah, that's also on our side, to be honest. Like we just this week posted our blog for the design for Union's governance itself, and there's like Union itself, like obviously has a chain for like aggregating CKPs and performing some of the bridge functionality, but our like governance module itself actually is on a different chain and leverages the bridge under the hood. So that way we can basically be on various EVM chains, have our tokens be on there, send through message passing, basically enact the gov proposals, and that way indeed, like in our experience as well, from a custodial perspective, from partners to work with, like the EVM forms a much better ecosystem to do so right now. I'm a big fan of Rust, of course, so I do like writing CosmWasm contracts purely for like that tiny bit where you like write the core function of a smart contract, but the EVM just has so many like peripheral nice to have, right? Like it's such a way more mature ecosystem altogether. You just get much more done in it. And I think, Stephanie, you guys too, right, are basically only on EVMs, or are you guys also doing stuff on Solana and such?
Yeah, like we're we're working to do stuff outside the EVMs as well. So yeah, etc.
But
at the moment still EVM.
Yeah, I mean on Solana, like I mean we've been working on it for a while now, so you'll see more to come. Yeah.
So it's something new. Good. Yeah. So you guys had the transition from CosmWasm to EVM fully. Are there like perhaps other things that you guys are thinking about to keep, say, interesting for developers? Are there like future perspectives? Maybe I saw something about like some massive performance increases, like a new consensus mechanism that you guys have developed. Does make, let's say, like faster than Solana? Like what kind of should I envision with this from a technical perspective?
Yeah, I mean, so, kind of looking kind of objectively today, say today is sort of already faster than Solana, than, obviously ETH, than, Aptos, you name it, in terms of time to finality, right? Which is the measure that I think matters the most for users, right? It's like, hey, I go and submit a transaction, it's now confirmed and irreversible, right? So, today, say, is already the fastest EVM chain, potentially the fastest chain period at the L1 level. And so, the Giga upgrade that you had mentioned, which is coming at some point soon, will basically help to further extend this lead. It will decrease latency, but more importantly than that, it'll increase throughput. And so, today, say you can support something like 12,000 plus, TPS. This will bring, say, to the world of, 250,000 plus TPS, and really serves to further differentiate, the say network and its ecosystem from others. And what I think will happen here, and I've written a little bit about it in a blog post that I put up recently, is that it'll enable new products that like previously haven't even been thought of in the space, right? And the great like kind of analogy I like to use is like, look, if you're thinking about the iPhone and how much mobile has proliferated, some of the apps that we see today wouldn't even have been concepts that people could have thought of pre-iPhone, right? And so having this kind of groundbreaking infrastructure that really moves the needle allows people to build awesome applications on top of it that may not even be a thought today, right? Whether that's like fully on-chain social networks operating at Facebook level scale, whether that is decentralized trading venues, something like a Nasdaq fully on-chain, whether that is games being built with all of the actions on chain and finding interesting ways to have some of these elements composable elsewhere. There are a lot of opportunities that having a blockchain with basically sub 400 millisecond time to finality and massive scale allows you to achieve.
Makes sense. So from like the differentiation from Solana, it sounds very similar to the like Mega ETH and Monad pitch, right? That you give me like unlock for a completely new category of applications. You guys are obviously like already in production, right? So technically ahead of these other parties. Do you see them as threats? Do you see like their approaches for scaling to make sense or be similar? Like how do you strategize for these new players coming to markets?
Yeah, I mean, look, I think there's a number of things that are important when you are thinking about new ecosystems. I think generally it is very difficult to meet expectations when you have, a pre-launch project, and people are excited about, potential airdrops, other incentives, et cetera. And so I think for us, it's a major advantage that we, have been live at this point for, 2 years plus, and over a year with sort of this EVM support. And we've enabled applications that haven't been possible anywhere else on the EVM, and ultimately will continue to push the envelope there. There's trade-offs with every chain, right? And so I think these three that we're talking about are no different. But ultimately, having a product that's live, having millions of users that are already using the product and doing so in a way that's reliable, candidly just takes time, right? And things like network stability, things like uptime, et cetera, they really only show when they show, right? There's no way to kind of account for them in advance. And so for us, if you're a builder who is looking to build on a chain, you care about performance, you care about things like stability and uptime, I think that there's a pretty obvious choice in choosing the chain that offers the same or better performance, but having done so with a proven track record for a while.
Yeah, I personally feel if I as a techie have to categorize this, then I would say like say still like to me at least offers a pretty similar or Monad offers a similar pitch to say, right, L1, fast finality, Mega ETH, very different. Technically, they pitch, of course, like much faster feedback, but time to finality is obviously actually much higher. So I guess the market has to show like what do people care about the most. Something that I see my friend Andy tweet about a lot is the club wars, right? Doing order books on chain, that type of thing. I don't think that's only dependent on like throughput or time to finality, right? So like Hyperliquid did a couple of tricks to make the chain like specifically very suitable for traders. I think related to like nonce management, for example, which for those listening in, like nonce is basically a number that your wallet tracks that ensures that like, you only have ever one outgoing transaction and not two competing transactions at the same time. But for traders, that's kind of inconvenient because they want to, especially automated traders, want to send hundreds of trades per second to like place an order, cancel an order. And in a peer-to-peer network, the nonce management becomes a bit of a bottleneck then. Do you guys at Say have maybe like plans or ideas to like tackle this? Is that something where you think, okay, this is not just about EVM throughput, this is more like clever design to make Say better usable for these types of applications?
Yeah, I mean, look, I think a lot of, how Say, the Say ecosystem has kind of developed over time, has been around, specific, interesting use cases. One thing that, we didn't really cover, but is part of the Say Giga upgrade is this idea of like multiple concurrent proposers, right? And really this idea of like, hey, if you, let me try to put it in the simplest terms, and you can tell me if there's anything you want to add. If you have, kind of one chef, in the kitchen, right? And he's cooking a meal, it naturally will not be as performant, nor in the case of trading, as fair and inclusive as if you have multiple chefs, cooking sort of different parts of the meal and it all being put together, right? And so the idea here is, MEV is a concept that we have heard a lot of, right? Anyone who's sort of in the space, and particularly those in the trading world, have heard a lot about things like MEV and toxic sort of flow and all of these terms, right? But at the core of it, it's really this idea of kind of decentralizing, the production of blocks. And Say, as far as I know, will be the first, EVM L1 that will offer this. And so I think things like this are really important to kind of further differentiating the ecosystem. You combine that with the fast time to finality, the low fees, and you get to something that is really special.
Do you think that maybe just within like hype that pre-product chains get at the moment, that Say is maybe a bit overlooked? Because the way you like lay this all out to me, quite exciting, right? Like a lot of the stuff that I read about where all the teams go like, once we're in mainnet, this is what we'll be working on, or these are some of the big ideas we're going to be doing in the next 2 years. Seems that you guys have that already like available or soon to be available, right? I think Solana wants to do like multiple concurrent proposers as well, right? But do they have that already, or are you guys going to beat them to market on that as well?
I mean, can't speak to timing for others, but think, definitely within the EVM space, we are, a pretty sort of clear leader here when it comes to some of these design choices and upgrades that we talked about.
Yeah, so I assume you're pretty proud of that at least. Put you guys in a good position. Okay, that makes sense. For like new potential L1s or purchase with tokens or builders out there, what do you think like they should be like looking out for? What's maybe a meta that has changed since like Say has launched, where you say these are like new items that you have to watch out for? Obviously, like Union is gonna TGE at some point, Q5 everyone, but just in like what would be advice that you would give Union on how to properly structure it, or what to look out for?
Yeah, I mean, look, I obviously can't, give any like sort of financial advice or tokenomic advice or anything like that. One thing I will say though, from the from the perspective of the ecosystem, is, it's very natural, like I said, to have a drop off in kind of hype and activity post TGE for any project, right? This is naturally just aligned with economic incentives, right? There's a lot of incentive to talk about projects, to engage with them, you know, try out things like testnet, etc., before the token is launched. Once the token is launched, it is pretty natural that in a lot of cases you will see sort of a drop off in hype, in activity, in, you know, mind share, etc. I think what you do basically and how you guys respond in that moment is the difference between something that's able to kind of create long-term success, long-term stickiness, and something that's not. And so I think, you know, that period, you know, a lot of people talk about, hey, you know, the build up to TGE and the TGE and all of that. What I actually would argue is even more important is basically the months, you know, directly after TGE, where you really get to see, you know, who your organic users are and ultimately what the true traction is of the ecosystem.
Yeah, that makes sense. I feel crypto is a very weird space indeed, where pre-products, it's easy to almost gain traction. It's hard for founders to filter out, like, is this real traction or will persist? Luckily, we're gonna have this like more revenue meta focus as well, right? Where indeed, like, you're gonna have a clear objective, what to do post mainnet as well. I always felt like it's a bit of a, like in the L1 space, you're always put into quite a difficult position where you kind of need to have a token live for security of the chain, of course, and have to balance that out with if it's a project ready from like a recurring revenue economical perspective to also commit to this. And that's, I think, as a founder, the difficult balance that you have to make.
Yeah, I mean, look, it definitely is. But you know, I think, you know, my kind of, you know, I guess it's somewhat of like a hot take at this point is, yeah, the revenue meta important. And I think particularly important for the later stage of project is, if you look at though the, you know, equity markets, you know, again, as an example, right, you have companies like Facebook, for example, right now, Meta, that maybe didn't generate real like substantial revenue for years on end, right? Or at least weren't profitable. And so, you know, I think the key here, to your point, is that balance, because trying to basically maximally extract, you know, revenue from a project, particularly, you know, a project being built by an early stage startup, can be fatal if not done, you know, properly, right? And so, you know, what I would argue is, yes, you know, revenue obviously is incredibly important for protocols, but it also is important to remember that virtually all of the teams in the crypto space are effectively early stage startups, and hampering your growth, hampering your sort of long-term prospects in favor of sort of short-term incentives is always something to be very wary of.
Yeah, so what I'm guessing is maybe it's not revenue meta that a project should be focused on, but economic activity meta, right? Don't extract, but please make sure if you're a financial product that money moves around and people are using it, and that's you're generating economic traffic for the builders on top of you.
Yeah, I think depending on your stage, it should always shift, right? And there is always a balance to consider, but um, you know, focusing entirely, I think, on revenue, you know, for a, again, early stage project from day one, is potentially you know, something that can impact your growth.
Yeah, makes sense. Yeah, thank you for the wise lesson, Justin. Is there stuff that our like community should keep an eye out on? Obviously, we have like the Say testnet connection. I think we have Say going live on mainnet as well. So it means that Bitcoin-based assets can start moving back and forth between Babylon and Say and a bunch of other connections that we have. So something I'm actually kind of excited about, because although Say was originally like IBC compatible, the implementation that we did is fully on the EVM stack itself. We're not using like the IBC Go module. Kind of agree with you that like doing everything full in EVM just leads to a much better user experience overall, makes the integration much easier. So from our perspective, I'm actually kind of excited to see this fully go live and secure asset transfers. But on the Say side, what's the next thing that our users should keep an eye on?
Yeah, I mean, there is so much cooking under the surface. I'm excited for, you know, for folks to see more about what we've been working on at the Say Development Foundation. One thing though that is top of mind, that we hinted at, I think it was last week, but we'll have more details on next week. And here's a little bit of alpha, is that there is an upcoming AI focused hackathon that's going to be live on Say. I'm really excited to see what people come in and build. There is up to $1 million in prizes and seed funding available. And it will be some really exciting co-sponsors who are able to help out and provide resources, as well as some great judges. So really excited to see that launch, and would invite anyone here who's thinking about building in the AI space to take a crack at that hackathon.
Makes sense. All right, then, Justin, thank you so much for educating me. For those who saw Stephanie leave, she actually had to catch a flight, so she put in the private chat that she literally had to run that very second to run to her Uber. So that's why she suddenly left, guys. Thank you, everyone, for coming in and kind of learning something new. I like this Union Hallcast a lot because instead of just speculating or memeing on Twitter, I kind of want to keep this an educational venue for the Union community and kind of this builder space. So thanks again, Justin, and hopefully we'll have you on again.
Thank you. Appreciate you having me. And before we hop, just want to say, all the views that I expressed today are my own. Say, Development Foundation, say Lab, say Foundation, don't operate any DeFi markets, give financial advice. We're not, broker dealers, etc. And so really just, happy to give you some honest feedback from my perspective. And again, look forward to potentially coming back and discussing more.
Sounds good. Thank you very much, sir.
All right. Thanks.
Everyone, thanks for joining. Bye-bye.